supply chainers, wherever you are in the world. This is Sarah Barnes-Humphrey with you today. Are you ready? Let's talk supply chain. Hello, everyone, and welcome back to Thoughts and Coffee, our second show of 2025. And I'm super excited because we've got a great guest that I can't wait to introduce to you, Brenda from UBS. And we're going to be talking all about investments, supplier relations, and so much more on the show today. Well, my name is Sarah Barnes-Humphrey. I'm the founder and host of Let's Talk Supply Chain, the Blended podcast, and the founder of the Blended Pledge. And we've got some really new and exciting, some fun things to talk to you about. But before we can do that, let's give a shout out to our show sponsors. So the Secret Society of Supply Chain is our newest membership community, and we have memberships for everybody in supply chain. Go and check out the Secret Society of Supply Chain.com. We've got the Supply Chainers group with some exclusive content, behind the scenes content, exclusive content from some of the leaders in the industry. We also have our Woman in Supply Chain memberships. We've got connections and executive groups as well, plus the creative room and for marketing professionals in supply chain as well. So remember, Secret Society of Supply Chain.com, and we will see you in there. All right, let's get to our newest episode of the week. This episode is 445, and it's with Amber Sally of Gains. Now, if you have not listened to this episode, I highly recommend this. I know I might be a little bit biased, but let me tell you, when Amber speaks, you want to go and check it out. She's talking about data-driven decisions, but the one thing that she's talking about that I have not heard anywhere else is about bias within your data-driven decisions. That's right. We all have an inherent bias when we're going to take a look at the data being presented to us and how we want to actually use it. What she's saying is that we have to be careful about that, and we need to use the data as it is and not try to manipulate it, because that's not what it's there for. So wherever you check out the episodes, either on YouTube, Spotify, Apple, go and check out this episode, because Amber really does a deep dive into what that means for your business. All right, we've got some brand new live events coming up tomorrow at 10 a.m. Eastern. Christine Barnhart of Newlogy is going live with Jake Barr, and they're going to be talking about the future of supply chain operations, where human expertise meets AI. AI is a big topic. Click the attend button, even if you can't attend live, and we will make sure to send you the link to that show. And then on Thursday at 11 a.m. Eastern, Frostbites. Now we're getting into cold chain innovation, lessons from Moderna's logistics leaders. Now this is going to be really, really great. Again, go and click the attend button and make sure that you either attend live or come back and click that link that we're going to send you as well, because it's sure to be a great show. January 28th at 2 p.m. Eastern, I'm doing a webinar with Supply Chain Brain and Anaplan, the untold story of supply chain, the hidden impact of integrated business planning. Hopefully I'm going to see you there. We've got the registration link in the comments, so go and click that, register today, and we're going to have a great discussion about integrated business planning that day as well. Now, Let's Talk Supply Chain just posted this yesterday. Lunar New Year is coming up, and we wanted to provide you just a literal reminder of what you can expect and what's going to be happening, and how you can navigate Lunar New Year through planning, advanced bookings, exploring alternative transportation solutions. So click the link in the comments. We will send you over there, and you can make sure that you have got that checklist for Lunar New Year as well. Also, we've got some other online events coming up. Thursday, January 30th at 2 p.m. Eastern. I'm also partnering with Supply Chain Brain for a container drayage webinar. And then I'm partnering with them again February 4th at 11 a.m. Eastern with WSI to talk about 3PL partnerships. So go and check those out. Links will be in the comment. And then the in-person events, Brenda and I will both be at Manifest February 10th through 12th. So hopefully I'll see you there. TPM 25 is happening March 2nd through 5th in Long Beach, California. And then we'll also be recording some podcasts on site at Home Delivery World May 21st and 22nd. Now this has changed. It used to be in June in Philadelphia. It's now happening in Nashville. And last but not least, on February 5th, I'm going to be in New York City for this event. I'm going to be honored as one of the women pioneers of circular fashion for 2025 by Sutton Strack, and I'm super excited about that. And if you want to attend, if you're in New York City that day, you can click the registration button and join me there as well. All right, I didn't think we had that much to cover, but now it's time to bring up Brenda. Brenda, hello, welcome to the show.
Thank you for having me. I'm so excited to be here.
I'm so excited to see you as well. And look, we've got our bright colors on today so that we can get rid of those winter blues. I can't remember where you are, but here in Toronto, it's still snowing. I feel like for the 72nd day in a row, all we've had is snow. So I needed to wear some bright colors today.
Yeah, I like this color blocking. I'm in Miami, but I think you know that I'm from Toronto. So I know exactly what you're going through right now.
Oh, it's crazy. Like, I don't even understand why we get so much snow. All right. So for everybody who does not know who you are, why don't you tell us who you are, what you do, and what do you do over at UBS?
All right. So again, my name is Brenda O'Connor Juanas. I work at UBS, which is a large wealth manager. I'm originally Canadian, but have been in Miami for the last 4 or 5 years. And essentially, Sarah, what I do is I work with clients, many of them who are entrepreneurs that have sold their businesses and are thinking about what life looks like after that phase. I help them with their portfolios and their financing, and in some cases even help sell their businesses. So I'm excited to have this conversation with you, to hear and learn from some of your viewers and listeners. And I'm excited to see you in Vegas in person in a few weeks.
I know, me too. So if anybody has any questions for Brenda, make sure to put it in the comments so that we can get to those a little bit later. But you're going to be at Manifest. I believe you're going to be on stage. Can you just give us a sneak peek as to what you're going to be talking about?
Yes, so the panel I'm moderating is called Unpacking M&A, what we can expect for this upcoming year. And I think that this is going to be a really compelling one for viewers, just because the M&A markets have been locked up since 2021. And as we'll get to in this conversation, with rates coming down and maybe some of that regulation being lifted, we could be entering into an interesting time for corporate M&A, strategic M&A, and also potentially even a reopening of the IPO markets.
Wow. I can't wait to hear that. Now, I think that, there's a lot of discussion around this particular topic. I don't feel that there's enough in supply chain talking about this particular topic. So I love to see that you are partnering with Manifest and you're going to be on stage talking about what people can expect. What does that look like? How do we look into the future of our businesses and where we want to be? But what's that trajectory? Like, what do we need to do to get there? And I love that. So we're going to get to your market update in just a minute, but I want to get to the poll of the week. So the question that we ask everybody, and we ask everybody a question every single Wednesday morning, what will be your top supply chain focus in 2025? Now, 35% of you said cost reduction. 32% of you said AI and automation. No surprise there, although I thought that number would be a little bit higher. 19% said resilience and risk. 14% said sustainability. Now, was this kind of surprising to you, Brenda? What do you think about this? Is there anything missing on this poll that you would have liked to have seen as an answer?
Well, Sarah, the biggest thing I didn't see on that list was tariffs. This is something that global companies, investors, and consumers are going to have to think about in 2025. So I was frankly a little bit surprised not to see tariffs. On the cost reduction, we saw the PPI numbers released this morning, which should be encouraging to your viewers and listeners, because we saw it come below expectation, which is great for managing costs, which is great for inflation. We have to see how that translates into CPI, the consumer part of that inflation equation, later this week. But I think that the cost thing is exactly something that I feel everyone still has their eye on.
Wow. Okay. So that wasn't a surprise for you. I mean, I feel like we've been talking about cost reductions for years. And I feel like, the optimization, the automation is going to help with some of that. But it's interesting to hear from you that that really wasn't a surprise. I thought AI would actually be a little bit higher than the cost
Mhm.
reduction. But I guess it makes sense with the inflation and everything that's going on right now.
Right. And Sarah, we have been talking about costs for the last few years because inflation is still elevated. I mean, we are not at that 9% year over year inflation we saw 18 months ago. But look, especially if you measure it by PCE or CPI and the core, we're still a little bit sticky. And the other thing I always tell investors and leaders and consumers is the inflation that we saw over a very short period of time was rapid enough that people still remember prices in 2019. So even though that percentage year over year number is much more palatable, it's the comparison of price levels. And so that is definitely still top of mind in all our discussions, business, personal, and otherwise.
So, just for anybody who doesn't know, PCE, what does that stand
Oh,
for?
okay. Sorry. I let me like
It's all
take a
good.
step back and talk, get rid of the jargon. Okay. So when we think of inflation, we think about a few different ways it is measured. When we think of CPI, that is just your consumer price index. That
Mhm.
is just the measuring of a basket of goods month over month. And we look at those levels. That's probably the most common and the most popular way to measure inflation. We have two measures of CPI, which is the headline, and then there's another measurement where we strip out food and energy to have a more discrete understanding of the basket of goods that's increasing. PCE, frankly, wasn't part of our lexicon 5 years ago, but we reference that, Sarah, because that is what the Fed uses, the Federal Reserve, who sets the rates here in the US. And we know that Jerome Powell, who's the head of the Fed, and as the whole Federal Reserve likes to look at the PCE, so that is the Personal Consumer Expenditure
Ah,
Index, as
good.
a measurement of real inflation. What are households really feeling on a month to month in terms of their income and expenses? So the Fed feels, and frankly, so do I, that PCE, that personal consumption expenditure index, is the best measurement of how households are really feeling.
Thank you for that. I really appreciate that explanation. I knew CPI. I wasn't quite sure about PCE, and I just wanted to make sure anybody listening could relate and understand what we were talking about. All right. So now is the time that I usually ask guests for a bit of a market update. What are you hearing about? What are people thinking about? What
Mhm.
we're going to get into what people should be doing in 2025 a little bit later on in the show, but give us a bit of a market update on what you're seeing.
Okay, so Sarah, we are at the beginning of the year. So before we look forward, let's quickly look behind.
Sure.
And 2024, frankly, was a really strong year, and it was better than many people expected from a variety of measurements. There was a lot of trepidation during the year around geopolitical crises, and even some uncertainty with the Fed. But no matter how you slice and diced and measured what good means, the performance was there. It was there in the markets. The S&P was up 23%. Uh,
Wow.
I also want to point out that in 2023, it was up 24%. So we've just seen the US stock market just roar and rally. We saw it in the GDP, the measurement of growth here in the US. Still came in above trend. There were some concerns that we would have fallen into recession, but frankly, that didn't happen. We made some progress with inflation, and also with the jobs, which I'm sure we'll talk about later in the show. We saw the US economy basically at full employment. There were 2.2 million jobs created last year alone. And so
Huh.
looking back, it was actually a relatively good year. Going forward, the conversations I'm having with clients and the things that are keeping me up at night obviously still have to do with some of these geopolitical risks here in the US. We have a new administration coming in next week. So I'm sure this is very top of mind for a lot of your viewers and listeners in terms of how that's going to impact their businesses. And then when I think about the economy, we still have GDP, jobs, and inflation that are heading into the right direction. So this is not a year that we have to be concerned about recession. What we also think about is what is the implication for companies in terms of revenues, profitability, and then in turn, stock prices. And our expectation is that earnings are still going to grow at 9% when you couple this with the good stuff that's happening in the macro environment, that this will lead to the S&P having another strong year. Maybe it's not going to be up 20%, Sarah, but we are expecting high single digits. So, from a 40,000 foot level, those are the kinds of conversations I'm having and what I'm thinking about.
Well, thank you so much for sharing that. I mean, those are great stats to really understand going into 2025. And I'm glad that we looked back to sort of look forward. I think it's really important that we do that. There were quite a few layoffs in supply chain, especially on the tech side. So understanding where the job market is and what that has also looked like is really interesting to hear, because we did see so much layoffs in 2024. So that's a really interesting stat, and I appreciate you for sharing that. Now, let's get into our first article, and then the second article, we are going to be talking about the risks for 2025 and a little bit more looking forward into this year. So this first article is about L'Oreal and talking about Supplier Decarbonization Fund and what they're doing with that. Now, their mission is to reduce their scope 3 emissions in their supply chain by 28% by 2030. And they're going to be doing that with mostly their supplier activities. Now, this is really interesting because I feel like the investment in sustainability has kind of been going down a little bit. I feel like the trend has been going down, and maybe you have another take on this, but I feel like the conversations around it are not happening as frequently. But it was good to see that L'Oreal is actually putting in the investment into their supplier database to be able to really help collaborate, partner, bring training and education to their suppliers to be able to help them reduce scope 3 emissions. It's great to see that, because at the end of the day, we can't just pressure people to do it. We have to work together and collaborate to make that happen. Plus, they're investing in a fund to be able to do that. H&M is also investing in a fund called the Future Supplier Initiative as well. And so there's a lot of investment from this particular article that is going into sustainability, decarbonization of supply chain. Where are the investments on sustainability? What is the conversation around that?
Well, let's just take a step back. And I agree with you. It does seem like the shine and the luster of ESG, and other sustainable investing has waned a little bit. I like this article, but just keep in mind, to put in perspective, L'Oreal is a $17 billion company in terms of macro cap. This is a $50 million investment. So this is creating a really interesting story, but we really have to understand other initiatives that L'Oreal is doing to really drive decarbonization, to really drive making an impact in the environment. I would say that there's been a lot of talk about something called greenwashing, which has caused some of the waning interest in sustainability and decarbonization. I see that with my investors all the time, a real desire to understand, is this fund, is this company, is this strategy really going to make an impact in the environment, in the supply chain, in the consumer base, in terms of what consumers are choosing? There is still an interest and a growing interest in both companies and investors wanting to improve some of the climate and global sustainability issues that we have. We have these great UN sustainability goals that we're all striving to accomplish and improve on. I think where the difference I'm seeing is in the due diligence and in the threshold of making sure that these funds and companies are, again, making the impact that they promise.
That's such a fair point. Like you said, there's a lot of greenwashing going on. We want to make sure that the money and the investment is going to the real issues that are going to make that impact, and we are going to be able to see a difference. So I love that you said that, because at the end of the day, it's one thing to throw money at the problem. It's a whole other to really do a deep dive and figure out where those challenges are that are really going to hit the mark and make such a big impact, and the impact that everybody's looking for. I mean, thinking about what has just happened in LA and what's going
I
on
know.
around the world, my heart goes out to everybody in LA. I'm going to be in LA in about a month and a half, and I'm thinking about, supplies and different things that I can bring. We've done a few donations, and we can all make a difference that way. We can all make a difference in donations and things like that. But that impact is going to be made by companies really investing and funding the challenges that are going to make the most impact. So I love that you said that. Thank you for sharing that.
I'll just add one thing that I'm really going to be interested in this year and going forward under this new administration is what happens with nuclear. Nuclear energy, I think, is a real opportunity. It is a clean form of energy. I think it's had the worst branding and PR out of any energy type. There are costs to all the energy sources we have, and you have some really big tech leaders that are standing behind this. For example, Bill Gates. So I think that's a really interesting area of exploration, investment, and opportunity. And that's one area I'll definitely be watching.
That is a great point. I was actually at a dinner with some chief procurement officers, and one of the conversations I was having was around nuclear. And they were saying that they actually want to be able to test it, but what is stopping them is the consumer or the perception of us, as people and human beings around nuclear, and the dangers behind it is actually stopping the progress of being able to use it. And so you're right, this is definitely something to watch. And, at the C-suite level, they're having the conversations around nuclear. All right, let's get to our second article. Now, this comes from UBS. Year ahead. Let's talk about the year ahead. You talk a lot about, since 2020, nearly 70% U.S. corporate profits are up nearly 70%. Now, that's despite lockdowns. That's despite the pandemic. That's despite inflation. That's despite geopolitical. So talk to me a little bit about this article. In this article, they talk about, the risks that we need to look at in 2025. But I also want to focus on some of the positives. Like, what are some of the investments that we need to keep our eye on, especially in supply chain and as businesses as a whole?
Right. And I think this dovetails or is a continuation of some of my earlier comments of what investors can and should expect coming into 2025. Again, the macro backdrop, Sarah, which is really what drives a lot of growth and equity and asset class performance, is positive. There's a lot of good things happening in that economic backdrop. So we continue to see stocks as a place that investors will be able to generate positive returns. When I was preparing for this conversation with you, I tried to find things that I would keep top of mind if I were a player in the supply chain space. So, things like what's going to happen with the US dollar. So what we saw with the US dollar last year, and you're sitting in Canada, so you are very attuned to this. You're about to come to the US with a FX rate that is not favorable to you making purchases down here. But that has also had a huge impact on supply chain. What we expect this year is a weakening of the US dollar. So that is going to allow companies and supply chains to reevaluate how to optimize this within their supply chain, whether that means manufacturing in other jurisdictions. Emerging markets is a really interesting place that we're keeping our eye on. So I would say US dollar and the FX interplay as you manage complex global supply chains is something that I would take away from this article if I was sitting in a company that's playing in the space. And I would say a weakening US dollar could create the opportunities. Again, we have a new administration coming in, and I have to say it once again, tariffs is definitely a conversation piece that is absolutely happening in every company, supply chain or not, coming into 2025. Now, I don't think that the risk of these sweeping 25% tariffs across major counterparties of the US is something that we need to be concerned about, because frankly, you need congressional support to push those big things through. Yes. But there are going to be, tariffs imposed in some form. And companies are just waiting to see what happens in the coming weeks to figure out what that means in terms of where they manufacture, where they're distributing to, where they are shifting their supply chain. So again, could potentially be both a risk and opportunity for companies that are thinking about what 2025 means. I would also say AI is something that was one of the things on that poll.
Mm-hmm.
And it's also something that we're looking at closely. Look, we've seen tech stocks, particularly in the US, really accelerate in the last 24 months, if not longer. We still think that there is opportunity for upside within some of these big names. And I think that AI is going to continue to drive not only innovation in the things that we do on a day-to-day basis, but particularly in supply chain as well, on the last mile stuff, on the e-commerce side, on how big companies service their consumers. And I think that could be a really interesting place for individual companies to continue to invest in. I think there's going to be interesting M&A in that space. And I think that as an investor, I would definitely be allocating capital to those big names.
Yeah, and I think on both sides of the coin, right? From an investment standpoint, investing in that,
Yes.
but also as a business, investing in that as well. But knowing what you're going to be replacing or automating with AI first, right?
Yeah.
Let's figure out what the challenges are that are going to make the most impact to not only your organization, but obviously your supply chain teams, the other teams within your organization as well. And I've talked to a lot of chief supply chain officers, and AI is really top of mind for them in the fact that they want to use it to be able to ingest data. Information is
100%.
coming to everybody so quickly, and there's so much information out there. There's good information, there's misinformation. They want to be able to sift through all of that and really get a good understanding of what those key insights are for them and for their team. And I think that's really going to drive a lot of the AI usage, especially in 2025, as we look into 2026 as well.
Yeah, I think it nicely dovetails into that other item on your initial poll about driving costs down.
Yeah.
I think that these companies are going to really be able to utilize AI to optimize their supply chain, in addition to enhancing the relationship with our end consumers.
Absolutely. All right. We've got time for one more article, but we only have a couple of minutes. So we're going to do this very, very quickly. Now, I want to give a shout out to Marcia. If you're not following Marcia, she has done an amazing job over the last year or so with some of her posts on LinkedIn and really breaking down what so many supply chain trends and what it means for you and your teams, your businesses, that kind of thing. This post caught my eye because she was talking about some of the bankruptcies that we've seen over the last couple of years with some of the retailers. And she really breaks it down into some of the hard lessons learned so that you, as a retailer, as an organization, maybe as a business that's supporting retailers, can really understand the impact of supply chain, not looking at your supply chain, not partnering with your suppliers, not having the right technology in place. That is what this sort of goes into and talks about. What were your initial thoughts on this, Brenda? I mean, I know this has kind of been a trend over the last couple of years for a variety of different reasons. What are you seeing on the investment side? Are people worried about this? Is this something that's still going to be top of mind in 2025?
Yeah, when I was reading through the list of those companies, first of all, these are, household names that we all know and love. And it's crazy to think that so many of them are not places that we shop at. I thought the interesting thread through them all was the threat of e-commerce and not being
Yeah,
able to innovate and invest in your supply chain to be
quickly.
able to optimize and retain your consumer base. I think part of this also has to do with the introduction of direct to consumer smaller brands that we've seen in the
Yeah.
retail space. That is a different type of company that frankly we haven't seen for a while. So I thought the e-commerce angle was interesting, and also the threat of not of other non-domestic players coming into a space and just not being well prepared for that.
Yeah, absolutely. One note I do want to make is that not all of them are bankrupt today. They've been able to turn things around. So go
True.
and check out that post because I want to make sure that we cover all angles on that. Well, that's it for us today. Brenda, you have shared some amazing insights with us today. I just want to thank you for spending the last 30 minutes with us. And for everybody who's been watching and listening, thanks so much for joining us. We will be back next week, Tuesday at 10 a.m. Eastern. Thanks again, Brenda.
Thank you for having me. See you in Vegas.